Hello and welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the Nifty reclaimed the 19,450 mark yesterday as the markets really recovered in the second half of the trading session. But will the recovery really extend for the third straight session on weekly options expiry day? We'll also discuss all of it and the global cues. But first up, the top headlines this hour. Indian stocks are likely to consolidate at current levels, ignoring weak cues coming in from Wall Street as local traders grapple with the weekly F&O expiry and seek value in sectors such as defense, PSU banks and select blue chips. Power stocks to remain on top of traders' buy lists on unconfirmed news that US-based funds GQG Partners has purchased an 8.1% stake in Adani Power for more than 9,000 crore rupees from the open market. Very good morning to you, Shail. Well, just like how I was pointing out that the Nifty did manage to end above its 50-day moving average on Wednesday. But the big question is, will it manage to defend this 19,400 mark on the options expiry day? And that's amidst the weak global cues. What are you looking at?
Yeah, good morning, Sakshi, and good morning to everyone who's watching us on this weekly expiry day, Thursday. Two good things have happened, Sakshi, in yesterday's trade. You see the Nifty closing at about 19,465. What's the good part is that we had a very, very strong intraday recovery of about 140 points from the day's low, which was something like 19,320. And similarly on the Bank Nifty at 43,946, although the index has ended 144 points in the red, but even the Bank Nifty showed a very, very strong bounce of about 340 points from the day's low of 43,600. So two or three things can be inferred from this point of view, which is number one, for the Nifty, 19,400, 19,500 seems to be emerging a decent support, and this is after we've corrected from a all-time high of about 20,000 points. So that is one, and the 50 DMA that seems to be providing some kind of support to bulls on the Wall Street, even as the internals are being sorted out, which is which stocks will probably help sustaining the Nifty at current levels, which stocks will take the Nifty higher from current levels. So the battle is between weak banks on one side and inherent strength coming in, beating down IT stocks as well as Reliance Industries. So this is what is happening on the Nifty, and if you look at the advanced decline picture, it's improved to 1:1 on the Nifty. What is also very interesting today, Sakshi, is that crude oil has corrected very substantially from previous highs of about $84 a barrel to less than 80, and that's a very good sentiment positive as far as the Wall Street is concerned. Apart from that, what also needs to be done is to see how till when the CPI inflation and slowing IIP keep on impacting domestic sentiment. We had a very strong buy number of FIIs yesterday, but that's because of 3 or 4 transactions that have happened. One is on JSW Energy, the other on Adani Power. So I won't pay much attention to it, except for the fact that it's a positive number. But overall, we've seen weakness creeping into the counters on Nifty. So as far as the open interest chain is concerned, the options chain, you have 19,300 and 19,400 now emerging as strong supports. Earlier, the support level was 19,200, so it's moving a bit up if you see call and put concentration. Similarly, if you look at the resistance, that's at 19,500. So it's a narrow trading zone again, Sakshi, around the 19,500 level, and that's how actually around the 50 EMA. So you'll see the Nifty move sideways, consolidate for a while, and then maybe we'll see either a breakdown or a breakout. So that remains to be seen, but the fact is that 50 EMA is a very, very strong support coming in for the Nifty, and I would suggest that since it's the weekly expiry, the first hour of trade would be a bit chaotic, volatile and choppy. So stay away and pay attention to second rung defense counters. Yesterday we had that fantastic rally on Garden Reach Shipbuilders, Mazagon Docks as well as Cochin Shipyard. The two of them, Cochin and Garden Reach, hitting fresh record highs. Mazagon tried to climb back to blue sky territory. Very strong delivery numbers there. So that's something that I'm looking at, and I'm hoping that the second rung of defense counters will now catch that viral strength and provide a lot of incentives to traders to look at cash stocks rather than indices which are still sulking.
Got that. So we will focus on those defense back again today, revisit some of those movers of yesterday, and also look at those that did not participate till yet. But coming back to the banking space, which you said that have been in the weakening space, the Nifty Bank did recover from the day's low yesterday, but the index ended lower for the 5th day in a row. Now, the last time the Nifty Bank index really had fallen about 5 days in a row was in March this year. Somewhere around 9th of March to 15th of March is when we saw this long stretch. What are you looking at as far as the Nifty Bank is concerned? Because it's corrected quite a bit from its peak.
Yes, actually, and we've been discussing the increase in weakness on Bank Nifty more compared with Nifty, and that's because we've seen selling pressure emanating very strongly on State Bank of India, ICICI and Axis Bank. Yesterday, for a change, we saw some traction coming in HDFC Bank. The low of HDFC Bank was 1581 in futures. It closed at 1610, and that's the heaviest weighted stock on the Bank Nifty. And despite this uptick that happened from day's low, the Nifty Bank ended 144 points lower at 43,946. Of course, this move from 1581 on HDFC Bank to 1610 helped the Bank Nifty to move about 340 points higher from its day's low of something like 43,600. But the pain remains there, Sakshi. I think it just sort of moved up much ahead of reality, and that's why we see mild profit booking continuing here. On the Bank Nifty, I'd just like to say that the test has been on the 100 DMA as a strong support that's coming in, and at 43,854 that's held yesterday. So let's see how weekly options expiry pans out today. We'll also keep an eye out on Nifty Bank, but the stocks that are likely to support the broader market are going to be from the IT space. As you would know that about 37-38% weightage of the Nifty is via banks. So that sector is weak, but the IT sector is helping Nifty. Sakshi.
Absolutely, and we'll definitely keep an eye out on those IT stocks as well. But from the F&O space as well, what are the cues suggesting on the weekly options expiry? Where are you going to keep your focus on?
Sakshi, 2 or 3 stocks. Since we've been harping about IT such a lot over the last 3-4 minutes, let's look at the Infosys chart. It shows that a lot of traction is coming in as far as buyers are concerned, and when you look at the rankings, it falls under the super bullish part of the market. We've seen short covering happening on Infosys, which basically means all those people who were bearish on the stock have reversed their trade, and we've seen a fall in open interest accompanied by a rise in price. So Infosys ended 1.8% higher, 1420 yesterday in F&O, with a fall in open interest which is about 1.3% lower. If you see the wonderful chart that our PCR has fired for you, you'll notice the pink line there, which is the 200 DMA. So this is where the fresh battle is likely to be played out, and let's hope that it closes above the 200 DMA either today or the weekly close that we'll have. So this is one stock that I'm looking at on the long side. Delivery statistics haven't been out of the ordinary for Infosys, but nevertheless they were still about 86% higher on Wednesday compared with Monday. The other significant chart I'll request the PCR to show is on escorts. Remember, auto has been one of the favorite themes that have played out very well in the markets, and escorts is a very high beta chart that you see in front of you. You'll see about 2-3 weeks of sideways trend which has broken out yesterday, and the stock closed near its day's high, also its record high. So this is one stock that I'm looking at. If you look at other financial and technical data on this one, delivery statistics phenomenal, Sakshi. 3.6 times more delivery picked up yesterday on Wednesday compared with Monday, as also the fact that open interest has increased 14% and the price about 4% higher. Even futures volume was 4.6x. So these are positives. If you see a mild dip in escorts, that would be an opportunity to go long, Sakshi.
Absolutely. So we will definitely keep an eye out on all of these stocks from the F&O basket as well, especially on the weekly options expiry today. But let's also keep an eye out on the kind of global handover that we've been getting. So the US markets did end in the red overnight. The Dow Jones was down about 180 points. S&P 500 was down about 0.8%. And this was all after the US FOMC minutes really indicated higher inflation is still a threat, and that could require more rate hikes going forward in the offing. But shares in the Asian markets also fell in the early morning trade after the sell-off in the US stocks. We are looking at the gift nifty that's also indicating flattish start to a negative bias start, at 19,410 at this point in time. But as a positive, like Shail was also mentioning, the overseas investors have actually turned net buyers, so that is a positive. After 2 days of selling, we've seen the FIs mopping in stocks worth about 722 crore rupees. Domestic institutional investors also buying about 2,400 crore rupees worth of stocks in the Indian equities as well. Shail, now that the conversation regarding rate hikes is again beginning to come under discussion, that perhaps the rate cut cycle will get pushed further now, not just in FY24 but perhaps to even FY25. Your own thoughts of how could this really play out for the Indian markets then?
Sakshi, my apologies, I couldn't get the question, but if you're saying how Asian markets weakness is impacting our stocks,
so Shail,
I only look at 2 or 3 major points as far as
So, Shail, I wanted to ask you,
ahead.
because of the kind of rate hike concerns that are emerging once again because of higher inflation, and the concerns regarding that the rate cut cycle will get further pushed away, perhaps to FY25, which we were anticipating might come in earlier and might supporting the markets earlier. Now that is not happening anytime soon, that looks far-fetched as of now. What will really happen in the Indian markets there?
Well, that's the reason why you're not at 20,000 or much higher. Let's welcome our guest today. We have Mr. Avinash Gorakshakar, Head of Research at Profit Mart Securities, joining us. Good morning, Avinash. Welcome to BTTV. Let's begin with 1 or 2 stocks which you think will make sense at current levels. What is it that you're looking at that would probably give a nice bounce in the near term? Avinash.
Yeah, good morning, Shail. See, we like 2 stocks. One is from the auto space, as you rightly mentioned. It's a sector which is favored by many. And the second is from the PSU banking sector. The first stock, from the auto sector is Mahindra & Mahindra. We believe that in this kind of volatile market, Shail, Mahindra & Mahindra is very strongly positioned both in the utility vehicles as well as in the tractor market segment. The Q1 numbers have infused a lot of confidence from markets. I think clearly 15% top line growth and a profit growth which was much ahead of street estimates of almost 3,000 odd crores. And I believe that the coming next 2 to 3 quarters are equally going to be strong, considering the fact that they're sitting on an order book of almost 12 to 18 months for most of their top selling vehicles. And most importantly, commodity prices have softened. The management is quite hopeful that margins could be maintained. They had an EBITDA margin of at least 18% in Q1 of FY24. the management is hopeful that these margins will be maintained, and I think the electric vehicle kind of initiative is also gaining momentum. The markets are expecting that possibly in the next 6 to 8 months a new slew of vehicles in the electric vehicle category would be announced by Mahindra. So I would believe that any dip in the market, if at all you get, I think this is a stock to accumulate for the next 12 to 18 months. We are looking at a target price of at least 750, 1,750 here. Now coming to the second stock, Shailendra, is State Bank of India. The stock got hammered after the quarter one FY24 numbers because the NIMs were much below what the street expected. But I think the management clarified that this was due to a one-off kind of provision. My sense is the stock still trades at attractive price to book valuations, and looking at the kind of credit growth in the economy, which is still double digit, my sense is that the bank has got significant levers to increase the balance sheet size and obviously benefit from the ongoing corporate capex plans which corporate India is doing in a very big manner. Most importantly, all their subsidiaries are doing well. So here also, I think over the next say 12 to 15 months, you could expect a target price of around 640, 650. So both are deep value stocks, but I think you need to keep a longer term horizon.
All right, deep value stocks, M&M from the auto basket and SBI, the leader of the lenders right there, both of them as the preferred category. But if I could take this discussion forward, Mr. Gorakshakar, as far as your auto pick is concerned, yesterday, very importantly, the cabinet has cleared the PM e-bus scheme as well. And, that led to a sudden spike in some of the companies like JBM Auto, Electra, Green Tech. We saw 7-10% kind of a surge in the second half of trading action yesterday. Focus is coming back on Tata Motors, Ashok Leyland also. We're seeing the brokerage houses also come up with reports like Goldman Sachs has given a buy rating with a target price of 710 on Tata Motors, and on Ashok Leyland they are positive with a 230 kind of a target price. So, where do you see value emerging as far as your the EV space is concerned and the announcements made by the government?
No, I think this kind of large order clearly signifies the government's intention to increase e-mobility within the public transport system. And I think, players like Tata Motors, Ashok Leyland, JBM Auto, all are going to be significant beneficiaries because the order is pretty large. So you could expect a significant market share, for bigger players for Tata Motors and Ashok Leyland. Ashok Leyland would gain significantly better because they have been a large player in the bus segment earlier also. So I think, from an investment perspective, I think Ashok Leyland looks better positioned considering the fact that they could get a bigger, pie of the entire order size because they are already, having a large capacity. They can scale up their production pretty easily. Tata Motors is largely a commercial vehicle manufacturer. Of course, they are also into buses, but I think Ashok Leyland, at these levels, if one were to look at the kind of investment kind of, positives, I would believe that a price of 225, 230 is very much possible provided this order is implemented quickly and we see some execution because typically government orders take a lot of time to get implemented on ground. So I think the next step now after this announcement is the execution.
Okay. Right. Also, apart from the auto space, another space that I wanted to discuss with you, Mr. Gorakshakar, is the power space. We were discussing how news reports suggest that GQG Partners is now acquired about 31.2 crore shares at an average price of 279, in multiple large transactions in Adani Power. And this has taken the GQG's overall investment in Adani Group to about $4 billion. Even in JSW Energy, again, there has been, stake by GQG as per reports as well. Apart from this, also several of the other, power space stocks are in focus. NTPC, for example, is in focus again, as Bernstein has initiated an outperform on the company with a target price of 274. What exactly is happening in the big power space right now? How are you looking at the opportunities emerging here? And, where would you be more positive on? Is it the power, generators, transmission, or the, providers that you would be more positive on now?
I think the entire power generating pack is attracting a lot of attention, not only the power generators, but even the power distributors and power distribution financial companies. So I think, power generation has caught the eye of most of the investors because supply still lags demand. And I think in the last 10 years, capacity has always has not come up that significantly as demand was growing. And I think now clearly with a lot of corporate capex growth, lot of residential, kind of demand, we are seeing that the throughput for electric power consumption is increased significantly. So I think, if you even see the numbers of Tata Power, or typically Torrent Power, we have been seeing that numbers both at the operating level, both in terms of top line and profitability, have significantly improved. In fact, Tata Power has clearly said that renewables and green energy are now going to be their new focus areas. So I think a combination of all that is resulting in stocks going up quite significantly. Although you must understand that these are typically heavy capital intensive businesses. So I think
Yeah.
within this, you look at Tata Power as a more better bet over the next say 12 to 18 months. And I think from the power distribution space, we still believe REC looks pretty attractive. Although stock prices run up, we believe that financing of power kind of projects is going to gather a lot of momentum in the next 6 to 12 months. So REC and Tata Power would be better bets compared to Adani Power. I think Adani Power would obviously gain because of this acquisition, but at the same time, valuations seem to be slightly pricey at the moment.
Okay, understood that too.
Right.
Let's also.
Tata
Please,
Power
sir.
actually moved about 1.7% higher in yesterday's futures trades, 235.80, and a mild uptick in open interest of about 0.4%. Avinash, our PCR is firing the charts of Garden Reach Shipbuilders, Cochin Shipbuilders, and of course Mazgaon Dock. Fantastic rally yesterday. Any reasons that you could discern? And within the defense space, what would be your top pick?
No, I think Shailendra, yesterday I think there was some news flow that new projects worth more than 1,25,000 crores are going to be announced, especially for the marine defense sector. And I think in that aspect, stocks like Garden Reach, Muscat Dock, Cochin Shipyard actually caught the attention on the markets. And I think, mind you, these companies are already sitting on a very large order book, giving them visibility of at least next 12 to 18 months. So I think you're going to
Absolutely.
see definitely this kind of news flow, boosting the stocks in this segment. And within the defense segment, I think, looking at the kind of valuations, Shailendra, I would believe that Bharat Electronics still appears to be quite reasonably priced in terms of the earnings, in terms of their, order book, which is currently placed. It's a debt-free business. And I think defense avionics is a very big market, which I think should benefit Bharat Electronics over the longer term. So I think, valuation side, I think BL looks pretty attractive. If someone who had to take a call for the next 12 to 15 months, a price of at least 160, 170 is something which is reasonably possible for BL.
Absolutely. 131 yesterday. Nice short covering seen in FNO trade on BEL. So this is what the stock is, what Avinash writes. Remember, even BEL is trading near record highs. But now all that we are doing is looking at relative value. If one particular stock has gone up by 15% in one sector, then it is most likely, and that is what bull markets are characterized of, that remaining stocks will also rise. Given the fact that shipbuilders rose yesterday, one would imagine that the rally in defense space would deepen, and Avinash picks up BEL. Uh, Avinash, also to touch upon one more part of the market, which is pharma. Very, very strong rallies emanating in mid-cap pharma space. Anything that catches your fancy there?
So I think, mid-cap pharma space, we believe the companies which are into pure APIs and which are into bulk drugs are expected to show better numbers as, margins have more or less stabilized. I think the threat from China has receded. And most importantly, I think these were companies which were trading at very low multiples. But I think looking at the kind of expansion and looking at the kind of earnings growth possibility, we believe that there are one or two companies where the valuations still are in favor of the investor. Some of them include IOL drugs and chemicals. In the large cap basket, we prefer to be with the larger formulators, especially US FDA related companies like Sun Pharma and obviously Torrent Pharma. We believe that these are stable kind of companies and where earnings are going to grow quite significantly over the next say 3 to 4 quarters. And I think in terms of the balance sheets also, I think these companies are pretty well positioned, minimal debt on the books and very strong cash flow. So I think the next phase of growth would come in for such companies which are obviously going to show a lot of expansion from their internal accruals and where cash flows continue to be quite healthy.
Okay. Mr. Korakshakar, also your view on Lupin, because you know Lupin from the pharma pack seems to be caught in a bubble of all positive news lately since the approval of the US FDA to its blockbuster drug, the generic inhalation medicine, that's Spiriva, that it got recently back in June. In fact, the company has also gone on to resolve the regulatory issues that were raised by the US FDA right there in the Goa and Pitampura units as well. Better than expected earnings in the April to June quarter. Your thoughts on Lupin right now, or do you believe that the positive news is largely priced in and the valuations are still something that you'd like to look at first before going ahead?
I think Lupin reported a very strong quarter one FY24 quarter, and I think the management commentary has also been very rock solid. But I think the price at which the stock is trading currently, I think has priced in some of the upside already. So I think we'll have to wait for another couple of quarters whether we can see the kind of trajectory what we saw in quarter one FY24 continue at. I think largely the markets are happy that regulatory concerns have receded. It's business back to usual. But I think at these levels, Sakshi, I would prefer to have a hold on the stock. Fresh buying, I would prefer only when the stock corrects, and that would be a good entry for Lupin.
Right. Also on Aurobindo Pharma, do you have a take, Mr. Gorakshakar? Just the news flow that it has launched HIV triple combination product for children living with HIV in today's trading action. The share was up about 0.5% yesterday at 874. Aurobindo Pharma.
Here also, Sakshi, if you look at the quarter one numbers and the management commentary, they were quite positive on the margins and on the kind of growth outlook, for the rest part of the financial year. My sense is, this drug is definitely an innovative drug, could possibly lead them to get better top line numbers from the second or third quarter of this financial year. But I think it still needs to be reaffirmed that Aurobindo Pharma has always had a very volatile track record in terms of earnings growth. So I think I would better wait for a quarter or two and then take a call. But yes, I think from a longer term perspective, they have a large presence in the US market, and which I think is now looking very promising considering the kind of earlier headwinds which the company faced. So I think longer term it is a hold, but fresh buying advisable only at lower levels.
Okay, let's now start focusing on pre-open trades. There have been two strong calls coming in from Avinash on Nifty heavyweights, which is of course State Bank of India and M&M. Let's look at where markets are headed. 2 points. There was a mild downtick expected because of Gift Nifty. We'll keep that in mind, and of course the fact that we've seen a very strong pullback happening in yesterday's trade, both on the Nifty and the Bank Nifty from intraday lows. Okay, the markets are ticking. The first trade on the Nifty is down 100 points, 19,355. Remember, yesterday's low was 19,320. We'll see how the Nifty pans out. A bit volatile now, but LNT 0.3% higher, 2,700. Let's look at the index heavyweights. How are they opening? As far as ICICI Bank is concerned, it's down about 0.5% at 950. A strong uptick happening on Avinash's favorite State Bank of India, 0.6% higher, 569. Infosys has opened 0.5% higher, 1425. Remember, it's battling the 200 DMA, and that is what is very, very necessary to cross for the bull phase to continue. We have Reliance 1% lower, 2552. Remember, this is a bit worrying. Yesterday's rally on the Nifty was largely on account of Reliance, as also the dip that got bought into as far as HDFC Bank is concerned. Again, weakness in HDFC Bank, 1% lower at 1590. What else is ticking in the green? So we have SBI and Infosys in the green, ICICI and Kotak flat, and Reliance and HDFC in the red as far as the Nifty is concerned. Let's move to the F&O part of the market apart from index heavyweights. Where do we see traction coming in? Sakshi discussed Aurobindo Pharma, so far the top gainer, 1.8% higher at about 890. Remember, this is a very, very high beta, very volatile stock, and already trading at multi-year highs. In the high beta, low ticket space, we have IDFC First Bank, 1.8% higher, 90 rupees. Lupin 1.5% higher, 1130. I see City Union Bank 1.3% higher, 123.90. What are the stocks that are in the red as far as the FNO is concerned? Nifty now a stable 30 points lower at 19,434. Remember, 19,400, 19,350 have been very strong supports on options data. Okay, so it's Hindalco down 0.5%, 442. We have Bata down 0.9%, 1632. We have Tata Consumers 0.8% lower, 834. These are the few stocks apart from index heavyweights which are in the red. Let's shift focus to cash where all the action is. Let's look at top gainers in the Nifty 500 space. Okay, Tejas Networks 3% higher, 870. Remember, this company has just won an order of about 7,400 crores from BSNL, and that is what is powering it. Sakshi discussed Adani Power 1.75% higher, 284. And we have let's look at Fortis. Hospital stocks are doing well, 1% higher, 323, and pharma. So that's the theme that is coming in front of us, and Nifty now trading flat at 19,462. So Sakshi, I presume that this 50 EMA 19,400, 19,350 is what is proving to be a strong support level as far as Nifty is concerned. We are awaiting the presence of Mr. Rajesh Palvia from Axis Securities, and then we'll look at it as far as the technical parts are concerned. You mentioned, Avinash, two stocks, M&M and SBI, on your buy list. Anything else in the blue chip space catches your fancy?
I think clearly, from the other kind of large cap stocks, we are positive on Larsen and Toubro. I think the company has announced a buyback at 3,000 odd rupees, and I think the order execution shell in the first quarter has been very strong. Order book inflows have also been at a record high. So I think even at these levels, I believe there's a little bit of catch up which the stock can perform. And I think longer term, I think the kind of tailwinds which are there in the infrastructure, in the defense sector, I would believe those kind of benefits would also come in for L&T. Typically, the second half is considered to be a more healthy kind of period for the company. So our sense is that you could see a lot of good earnings traction and look at the target price by at least 2850, 2900. And obviously, when the buyback starts, you could see a lot of action in this stock.
Okay. Mr. Gorakshakar, since we've been discussing the pharma space at length, one more stock that is suddenly buzzing, slight ticks coming in the pre-open trade, Glenmark Pharma, that has got a US FDA approval for an ANDA for an ointment right there. So, could you look at this stock and let us know what are your thoughts here?
I think, Glenmark Pharma reported a pretty decent set of numbers. The management commentary also post the quarter one FY24 numbers has been quite encouraging. And I think, from a very long time, the company has started performing. I think it was one of the, significant underperformers in the pharma basket for a very long time. Our sense is that if the US FDA approval has come in, obviously new business would flow in. But even existing business wise, I think you could see stronger numbers over the next 2 to 3 quarters. So I think, despite the, bump up in the stock today and, in the past, I would believe that it's good. It's a reasonably good, kind of a bet in the pharma pack within the mid cap, pharma space, because a lot of selling has got exhausted. And I think now the stock looks to be headed higher.
Let's again, Sakshi, look at the broader markets as far as the pre-open trades are concerned. Nifty hovering between 19,430, 19,450, down about 22. Bajaj Finance, Sakshi, this is a very high beta counter, up 0.7% on the Nifty, 7,032 is what I see. Axis, Bajaj Finserv, Infosys and State Bank of India are in the green, although these are just mild upticks. What is worrying is again HDFC Bank 0.5% lower, 1595. Reliance 0.3% lower, 2567. Remember, today is the weekly expiry day, so the first hour of trade would be devoted to maybe deciding the overall range of the Nifty. I'm expecting some kind of short covering again to step into the market, and remember we had seen a very sharp rally yesterday from day's lows. So beyond that, let's also see what else is happening. Adani Power 1.7% higher, 284.60. We also have the other stocks in terms of active trade. Reliance is the weak part today. Let's see how it pans out. I am waiting for Rajesh Palvia to join in for a technical view on the market. But till that time, let me just ask a question of our friend Avinash. Avinash, any view on auto stocks? What would be your top pick? Escorts ended record high yesterday. Any view there?
No, I think clearly, Escorts has been quite volatile in the recent past, and I think at least after Kubota has come in, I think clearly the markets are obviously getting the feeling that possibly export business for the company could get scaled up significantly. Most importantly, their expansion has also got completed, so you could see a strong volume growth throughput also coming in the year in financial year FY24. I think the stock has risen pretty fast in a very short time span, Shell. So I think I would be more positive and be more keen to buy the stock at lower levels. Although I believe that the incremental earnings growth trajectory over the next say 1 to 2 years is quite promising. In fact, our house view is that possibly the stock could even exceed 2,900 or 3,000 odd levels over the next 12 to 15 months. But a better risk reward would be obviously at a lower price range, which could actually better the risk reward ratio.
Okay. Apart from the auto pack, Mr. Gorakshakar, just like how Shell was pointing out, Bajaj Finance, that's a stock that's buzzing. In fact, we've also got a brokerage house report, like Morgan Stanley has come out with its reports on NBFCs, and where it has given an overweight rating on Bajaj Finance with a target price of 9,500, Can Fin Homes at 1,000, SBI Cards, it's given an 1155 kind of a target. And they do believe while the Q1 results were a mixed bag, the repo rate cut expectations which are getting pushed out, given the elevation in inflation, that could exert some pressure on the NBFC stocks. But still, some of the valuations are more towards positive or attractive. From the NBFC basket, are there any stocks that you like at this point?
No, I think from housing finance companies, we like Canfin Homes. We believe that at the current odd levels, also the stock looks pretty impressive. The other stock is LIC Housing Finance, which is having LIC as its parent. Our sense is these stocks have got the potential to scale up significantly, considering that asset quality has also been very strong, and obviously the loan book growth, the disbursements have been going very strong. Our sense is that housing as a kind of a segment within the real estate market is going to gather a lot of momentum, and real estate financing, especially for the housing finance sector, is definitely going to be a focus area for the government also. As far as Bajaj Finance is concerned, Sakshi, I think all of us are aware that on the 28th of August you're going to see the Geo Financial share listing, and I think markets are keenly awaiting for this listing. I think once it gets listed, every market player knows that there's going to be a significant disruption in the financial services space. So I think it's better to wait and watch for larger players like Poonawalla Finance or Bajaj Finance, which would be directly competing with Geo Financial.
Right. Okay. Apart from
So
this,
pre-open trades have
yeah,
settled, Sakshi.
yeah.
Pre-open trades have settled, Sakshi, and we have NTPC settling at a weekly high breakout, 219.45. We have Asian Paints 32.23, and we have Colgate. Very interesting thing that's happened on Colgate. I don't remember the last time I saw a price tick of 2000 on the charts. Okay, so it's a swing trade in the making today, about 2-3 weeks of declines, and now let's see how it pans out. It's about 2004 rupees in cash, and apart from that I see Lupin, which you've already checked out on. Fortis, Avinash, we've seen a plethora of gains coming in on a lot of hospital stocks like Medanta, like Narayan Hirdale, Any view that you would hold in this particular space, and which one would be your favorite?
No, I think within the hospital space, I think Shell, as you rightly pointed out, there's a lot of interest now in this sector. We would like to bet on two companies. One is Narayan Hrudayalaya, and secondly is Fortis Healthcare. Our sense is that both these companies are very well positioned. In fact, Narayan Hrudayalaya has done a very strong kind of Q1 FY24 performance, and in fact, very surprisingly, it's one of those players which enjoys a return on capital and return on equity in excess of almost 22 to 25%, which is very difficult in a capital intensive sector like hospitals. Our sense is that multi-speciality hospitals could obviously gain a lot. And another company which I would like to mention is a smaller hospital company chain, in Ahmedabad, obviously pan India also, which is Shalby Limited. Shalby Limited has also been attracting a lot of investor interest, considering the fact that it's steadily improving its top line profitability, and has got a large presence in the orthopedic segment, where they have a leading market share position. So I think specific stocks and specific companies where the earnings
Right.
growth trajectory is preserved are definitely good bets in the hospital sector.
Okay. Um,
Right. We have Mr. Rajesh Palvia. He's joined. Yes, Sakshi, go ahead.
Yes, I was just about to
Go to
introduce
Rajesh.
Mr. Rajesh Palvia, who's joined us. He's the head of technicals and derivatives research at Axis Securities. Good morning to you, Mr. Palvia. Great to have you with us. The markets are, just about 14 points down, but 19,450 is what we see on the Nifty. On the weekly options expiry, what are you looking at, and the strategy that you'd recommend investors? Mr. Palvia, could you unmute yourself, please?
Oh, so
Yeah, we can hear you now.
okay. So market has taken the support almost near to its important support area of 19,400, which is very important for today's trading session. So if at all, if it slips below to 19,400, then some more unwinding pressure we can expect in the market, and then Nifty can slide further towards 19,300, even 19,250 level also. If he continues to hold above 19,400, some pullback action could be there in the market, and 19,550 is the immediate target which we are projecting for this pullback on the higher side. So stock specific, one needs to focus at the current juncture, because index is stuck in very tight range. So some of the stocks like HAL we are focusing, Lupin and Piramal Enterprises. These three stocks are looking very attractive for today's trading session on the buying side. So these three stocks we are focusing to buy in today's trade: HL, PL, and Lupin. These three stocks we like to buy for today's trading session.
Right. So with those inputs, let's look at where markets are opening. Nifty is opening 30 points lower, 19,435. Bank Nifty is weak, about 82 points lower, 43,856. A mild red tick on the Nifty IT index as well. Now let's look at heavyweights. Where is the action on the green side? I don't see anything at all except Axis Bank, which is flat at 934, Bajaj Finserv, which is flat at 1472, Infosys mildly in the red, 14 to 18, State Bank of India 0.1% lower, 564, Reliance about 0.5% lower, this is worrisome, 2561, and HDFC Bank 0.5% lower, 1598. The Nifty slipping a bit, 38 points lower at 19,431. Remember, today's weekly expiry day. And the Bank Nifty down 60 points at 43,885. We'll let them settle down a bit. Let's look at what's happening in the F&O space. Lupin, this was the pick identified by both Sakshi as well as Mr. Palvia. It's the top gainer, 2.73% higher, 1138. High beta, India Bulls Housing Finance, 0.6% higher, 166. Hindustan Copper recovering after 2 days of pummeling, 0.5% higher, 143.80. Birla Soft, Asian Paints, Ashok Leyland. Remember, these are all heavyweights and they are all ticking in the green. Nifty still down 24. Let's look at the action in NSE 500. Cochin Shipyard, no stopping there. The top gainer in NSE 500 now up almost 500, fresh 5% up at a record high 846.95. Bus maker Electra 3% higher 1259. What else is sticking which is looking good? UCO Bank 1.5% higher 3085. Tejas Networks 2.5% higher 861. Let's get to Rajesh Palvia immediately. Rajesh, your views on Tejas Networks, fresh record high, the counter running away. What is the chart telling you?
So after gap up opening, yes, stock is approaching to its supply zone, which is at around 868, 869. If its stock crosses 869 level, then this rally can extend because that is the immediate challenging level as on the near term setup. So above 869, our target would be around 920 for Tejas Network. Overall structure is very strong for the stock. We have seen since last 4-5 months, the stock is continuously forming higher high-low formation. It clearly indicates that there is a sustained buying action is taking place in the Tejas network. So one can hold their long position with stop loss of 845. Once a stock crosses above 869, this rally can extend towards 900, 930 level.
Okay. One or two
Right.
more stocks that I'm
Let's
missing.
look at another set of the markets. Actually, just a moment, please.
Sure.
The
Absolutely.
Nifty down still 20, 19,444. Uh, in the broader markets, Sakshi, we've seen a tick of green. We track 19 indices of 19, about 16 are in the green. The Nifty PSU Banking Index is the top gainer, 0.3% higher, 45.44. Remember, it's the weekly expiry, so it's the cash segment which will pay more attention to the markets. The Nifty is now just 18 points lower, 19,445, and it's Reliance which is putting its weight behind all the gainers. Reliance at the moment flat at 25.74. Remember, it's recovering from its day's low, and the entire defense pack is in the green. Cochin Shipyard 5% higher, Garden Reach 3% higher, Zen Technologies 3% higher, Midhani 2.5% higher, Masdoc 2% higher. Rajesh Palvia, your top pick in the defense space, and any view on Cochin or Garden Reach?
So from F&O space, our preferred pick would be HL that I've already mentioned in the beginning of show, and one can take trading bet in the HL for on the derivative side. That is our top pick on the derivative side from defense sector. Yes, Cochin Shipyard is also looking very attractive, very strong buying action, a very strong bullish candle on the daily as well as on the weekly chart. It clearly indicates that strong buying is taking place in the stock, and we can see a target of 950 to 980 in the continuation of this uptrend. So Cochin Shipyard is also buy. Keep your stop loss at 845. Even if we look at the Majgaon dock, is also looking very promising. After a mild profit booking, now stock is moving up since last three trading session. Stock is forming higher high-low formation, and it's a flat kind of pattern is taking place on the daily as well as on the weekly chart. So we believe that Majgaon dock can also continue furthermore upside as overall structure is bullish. 2050 to 2100 could be the possible target in the near term for Mazgaon dock. One can buy this stock also with stop loss of 1930.
Okay. You know, the PSU banking space is buzzing. Avinash has chosen SBI as his top pick, and that stock is up by 0.4%. We're also looking at UCO Bank, PNB, Bank of Baroda, Bank of India also all up into the green. And in fact, the Nifty PSU Bank index is one of the top gainers in today's trading action. Mr. Palvia, your thoughts here? Any of the PSU banking space stocks that attract you at these levels?
So most of the PSU bank have corrected in last couple of week, and now most of the stocks are trading near to their important and critical support area. If we talk about SBI post earning stock has taken profit booking hit, and then now it's trading near to its previous swing low, which was there in June 2023, which was at around 550, 555 zone, and stock has taken the support from those level. Even if we analyze the other banking stocks like Bank of Baroda, Canara Bank, so most of the stocks are in a similar pattern. We do expect that if these previous swing lows are hold by these stocks, some pullback action should be there, because in this bull market most of the stocks have corrected, and some profit taking is already taken place. So we expect some pullback action can be there in most of the PSU banks. For SBI, we expect 575, 578 is the immediate level on the higher side. If stock crosses above 578 on the closing basis, then SBI can move further higher towards 595, even 600 zone also. So those who have bought this stock at the lower prices, they should hold their position with stop loss of 558. For Bank of Baroda, 184 is your stop loss. If it's not breaks below 184, there could be chances of pullback towards 195, 198, which is the immediate target for Bank of Baroda. PNB is also looking promising. We have seen good accumulation in last couple of trading session, and we do expect that once PNB crosses above 64, 65 level, then PNB can also show some more bullishness from the current level. Overall structure is on the bullish side. So above 65, we are projecting target of 72 for PNB. One can buy and hold this stock also with stop loss of 59.
Okay, understood that. Mr. Gaurav Shakar, your thoughts on the Adani Group stocks? Most of the stocks are buzzing in the green. Of course, Adani Power we've discussed, Adani Enterprises, Adani Ports, and now even Adani Transmission. They're all buzzing in trade. Anything that looks positive to you at the current levels?
I think Adani Group stocks have been very volatile. In fact, previous week we saw that Deloitte actually resigned as their auditors, and there was a complete sell-off in the Adani Group stocks. Today we are seeing Adani stocks again getting attention from the markets. See, my sense is that only for those investors who have got a higher risk appetite should put money in Adani Group stocks, and within this pack we like Adani Ports as one of the best infrastructure plays available at a fairly good valuation. So I think Adani Ports at the current valuation can give a decent risk reward, considering the kind of traction we have seen in Q1 FY24 performance, and the management commentary that volumes are going to increase significantly as port activity is going to be quite higher in the next few 2 to 3 quarters. So I think Adani Ports could be a good bet. I think other companies like Adani Power, Adani Transmission, we believe that these are companies which probably are, even as of now, the valuations look a little pricey, and we would be a little we would stay away from these companies. So Adani Ports at best could be our best investment pick at the current.
Right. Sakshi, let's just look at some spot and price ticking. Entire high beta is really in demand. HBL par up 2.6%, fresh record high 252. We've already discussed Tejas Network, 2% higher 862. Bombay Stock Exchange is trading 1.7% higher 853. PNB 1% higher 6240. CSB Bank 1% higher 306. In terms of the internet space, you have Zomato, Policy Bazaar, and Nykaa trading in the green. So all these stocks which attract a lot of trader interest on the long side are in the pink of health as far as markets are concerned. Let's get Rajesh in, and the PCR will draw a chart of Shriram Finance. Remember, this is the top gainer as far as not only the FNO is concerned, but also in the NBFC space. What do the charts tell you on Shriram Finance, Rajesh? Very strong price action and a nice rise in open interest as well.
Yeah, definitely. So very after opening, yes, there is a buying action is happening in this Shriram Finance, and looking at the near-term setup, stock now managed to give breakout of last 4 days downtick, and reversal is taking place on the daily chart. The stock is very well placed about to all its short-term, long-term moving averages. So looking at the today's price action in open interest also, we expect that once the stock crosses above 1885, then this rally can extend towards 1950, 1960 level also. As overall structure for the stock is on the bullish side, so our view is on the buying side for the stock. One can buy at the current price also with stop loss of 1840.
Okay. Remember Shriram Finance, when it comes to the fundamental approach of this particular stock, it's relatively, how should I say, undervalued compared with all the NBFC prices that you see around. Let's get Avinash in. Avinash, would you have a view on Shriram Finance?
No, I think Shell, as you rightly pointed out, this has been a stock which has always relatively underperformed as compared to the other NBFC players. They are a large player in the used the commercial vehicle segment, and I think where yields are significantly better. Of late, the management has been quite cautious on asset quality, and the run rate has reduced moderately. But I believe that over the longer term, they have a very strong business model. They have a very strong network in southern India, and most importantly, the balance sheet has been quite strong. Most importantly, very few competitors from the organized space. So I would believe that given their stance and given their kind of growth proposition, I would believe that this price is definitely worthwhile for an investor who wants to invest for the next 12 to 18 months. Definitely growth momentum is strong, and I think it will continue at least for the next, say, 12 to 18 months ahead.
Okay. Um,
Let's get Rajesh Palvia in.
yes, sir. All right. Rajesh, I wanted to discuss with you the auto pack, that's buzzing. Like we were discussing with Avinash also, the EV space has been buzzing with again today after the sharp surge we had seen yesterday. Also, Tata Motors, Ashok Leyland, these kind of stocks are buzzing again. Your thoughts now?
Yeah, definitely. So automobile sector is clearly in uptrend. Some profit taking was there, but still, if you analyze the overall setup, most of the stocks are showing strength. And stock like Tata Motor, Ashok Leyland, Mahindra and Mahindra, these three stocks are clearly in uptrend, and we are seeing outperformance is taking place in all these three stocks. So we do expect Tata Motor can exhibit furthermore, momentum on the higher side. If you analyze the daily setup for the Tata Motor, stock is now giving breakout of its falling channel on the daily chart, and this reversal is indicating that now if stocks holds above 605 level, then possibly this pullback can extend towards 650 level, which is the next target we are projecting for the stock. Even on the Ashok Leyland, there is a clear outperformance. Stock is slow, steadily moving higher. And looking at the monthly, weekly setup, we expect that this rally can extend further in the Ashok Leyland, and possibly 210 to 215 could be the possible target on the positional basis for the stock. So Ashok Leyland is also buy with stop loss of 186, and M&M is also looking very attractive. That stock is also looking promising on the automobile pack, and we are projecting target of 1650 to 1660 on the high side. Even as you pointed out about JBM Auto, that is clearly in uptrend and very strong buying action since last couple of trading session. And looking at the overall setup, we expect that now stock is approaching to its previous swing high or multiple supply zone. Once stock crosses above 1500 mark, then possibly this rally can extend towards 1650, 1700 also. So this stock is also looking very promising, and one can buy or hold their long position if they already bought at lower price with stop loss of 1430.
Okay. Avinash, I think we've been discussing the pharma pack, and I'm finding more and more stocks that are buzzing positively now. Gland Pharma is now up 6.5% again in today's trade. We've discussed Lupin, Oro Pharma, Sun Pharma, we've already discussed, Glenmark Pharma, but now Gland Pharma, any thoughts here?
So I think Gland Pharma, Sakshi has reported very strong numbers in quarter 1 of FY24. The management commentary has also been quite positive, and this comes after almost 2 to 3 quarters of underperformance. So I think clearly Gland Pharma, there has been some sort of bottom up buying at these current levels. More importantly, I would prefer to have at least another one or two, but a couple of quarters where we could see this kind of growth what we have seen in the quarter 1 of FY24 to be sustainable. Clearly, I think there has been some change in the management strategy and focus. And I think if it helps the company and it is sustainable, then I think definitely we could expect further re-rating. But yes, at the current odd levels, it's a hold from our side. We would be advocating a buy only once we review the stock, over the next couple of quarters.
Okay. Let's focus on another sector which is really buzzing in terms of strength as well as trader demand. Rajesh, this is for you. The PCR will draw a chart of KPIT. KPIT Systems is about to sort of take out its previous high, and it's accompanied by very strong volumes in the morning. 11:58 for you. Anything that the charts say about KPIT, Rajesh?
So Shalji, we are holding our bullish view on KPIT Tech. We are holding this stock in our fund also, and we do expect that KPIT Tech can do furthermore upside momentum from the current level. Looking at the overall chart structure, it's in high top, higher bottom formation on the daily, weekly time frame, which clearly indicates that there is a sustained buying action is happening in the stock. Whenever you get any kind of dip, buyers' interest is continuously there in the stock. Looking at the near-term, short-term setup, yes, there is a reversal from the previous dip, and we expect that once the stock crosses above 1175, then this rally can extend towards 1250, 1300 also in the continuation of this uptrend. So one can buy as well as and hold this stock for long-term perspective also with stop loss of for trading point of view, your stop loss should be around 1120. But for long-term perspective, one can buy and accumulate this stock if you find any dip in the stock prices with stop loss of 1050. So 1050 is the stop loss to buy and hold this stock on the positional basis. Our target is 1300 on the positional basis.
Right. Remember, the all-time high as far as KPIT is concerned is somewhere in the vicinity of 1184, and this was hit in the earlier part of August, which is 7th of August. Similarly, Rajesh bhai, another view on Birla Soft, 1.73% higher. It's the top gainer in the FNOIT space, and it is also showing a very sharp increase in open interest. Would you care to look at Birla Soft charts?
So this is the one of the stock where we are seeing outperformance from mid cap IT as well as from the IT space. This is the fifth consecutive month where stock is forming higher high low formation. This clearly shows that there is a strong buying is taking place in the stock prices. The kind of breakout which we are observing on the daily as well as on the weekly chart, we do expect that this stock can scale up further higher. 475 to 480 is the immediate target we are projecting as the stock is available in the derivative. So 480 is the immediate target on the higher side. One can buy and hold this stock with stop loss of 448, and our view is on the bullish side for the Birla Soft.
Okay. Got that. Rajesh, your thoughts on the hospital stocks? We discussed this with Avinash as well. So I wanted to take your attention to some of the stocks that are buzzing in trade. Metropolis Healthcare, that stock is up 2% in today's trading session. We've been seeing, Apollo Hospitals really buzzing sharply. Anything that interests you from this basket?
So we have seen a significant corrective action in Apollo Hospital, and now stock has taken the support almost from its 100-day moving average, and some recovery is taking place. But still, Apollo Hospital is struggling to cross its immediate supply zone of 5050, which is very important and critical on the high side. Once stock crosses above those levels, then this recovery can extend further higher, and then 5200 could be the possible target on the Apollo Hospital. But yes, looking at the near-term setup, 4800 should be your stop loss if you are buying Apollo Hospital. Metropolis is also having the similar kind of pattern, and looking at the near-term setup, some recovery is taking place from its previous swing low, and almost stock has taken the support from those area only. 1340 is the immediate important support area. So one can keep a stop loss of 1340 to play some pullback action in Metropolis. Also upside target one can see towards 1430, 1440 on the higher side.
Okay, understood that. Avinash, your thoughts on the new age tech space again? We briefly touched upon it, but the kind of movement we've already seen in Zomato, in Paytm, for example, again, Paytm is in news again today, and investor Antfin Holding BV has offloaded 6.5 crore equity shares, which makes Paytm largely an Indian-owned company now. Your own thoughts on these particular stocks? Anything that looks promising?
I think all the new age stocks have now started reporting better kind of top line numbers, better contribution profit numbers. And I think in this space, Zomato actually looks to be a very solid bet, considering that in the food app business, there are only two players. I believe that, the best part is that they have a very strong competitive moat in the sense that, these food app applications are now increasingly entering even tier 1, tier 2, and tier 3 smaller cities. So I would believe that Zomato looks decently placed. I think we would possibly be waiting for another couple of quarters when we could be seeing operating cash flows and operating EBITDA recorded by the company. But the previous quarter number was a pleasant surprise. The losses have come down from 350 crores to almost 50 crores. So that clearly shows that a lot of cost cutting and a lot of volume throughput expansion has happened. So I think these things are definitely going to boost up the sentiment for Zomato, and we believe that over the next couple of years we could see a thriving business coming up from Zomato.
Okay, all right. Many thanks, Avinash, for being with us on the show and discussing all these wonderful stock ideas and your thoughts on your stock picks as well. We will continue to revisit them, M&M and SBI, your top picks at this point in time. But just like how Shell was mentioning, Birla Soft is at day's high. So that stock continues to buzz. Escorts also spotted by Shell. And this was before the market's opening that Shell was talking about. Record high for the second day in a row. And these stocks, Rajesh, what do you say on these stocks now?
Yeah, definitely. So Birla Soft can continue furthermore upside as the overall structure is on the bullish side, and we do see that yes, this momentum can extend towards 475, 480 zone. So Birla Soft is buy, and one can buy and hold this stock. 448 should be your stop loss.
Okay. Let's look at the broader markets, and 19,400 is being tested on expiry day. As far as Nifty is concerned, we are about 64 points lower. Losses on the bank Nifty are on the lower side, but it's IT that's bleeding today on the front line, even though mid-cap IT is doing pretty well. So it's TCS down 0.2%, Infosys down 0.3%, and remember these falls are accompanied by a rise in open interest. So this is a bit worrying as far as the only heavyweight sector that was defending the Nifty, and that is why you see this kind of a red tick on the index. Let's look at some other stocks on the heavyweight side which are probably acting in concert. ITC is down 1.5%, 443. Bajaj Finance is now in the red, 0.4% lower, 69.55. HDFC Bank is in the red, 0.25% lower, 16.01. TCS, Infosys, ICICI Bank, all of them in the red, and that's the reason why you see this downtick. Nifty is now broken below 19,400. It's 75 points in the red, 19,390. Let's look at the other part of the broader market that's moving pretty well. Rajesh, this one is for you. A very well-known PSU stock, Engineers India, days high.
Yeah, so Shalji, yes, there is a buying action is taking place. If we analyze the near-term setup since last 3-4 trading session, stock is showing very narrow price range, and now after today's opening, some buying action is happening. On the immediate basis, if a stock crosses over 154 level, then this movement can extend further higher. 162, 165 is the next target for the stock. Overall structure is on the bullish side. Stock is moving in up sloping channel on the weekly chart. So overall, buying interest is there in the stock prices. So one can buy with stop loss of 148. Upside target is 156, 160 on the near term basis.
That's where you see interest coming in. The other point I wanted to mark out to Rajesh was the movement in Punjab National Bank, Rajesh. 62.65 on the charts, amongst the top gainers in the PSU banking pack today. Uh, PNB has attracted both volume from investors as well as traders. What are the medium term charts on PNB saying? And we'll also get Avinash on this one. But first to you, Rajesh.
So we are bullish for PNB, and we have mentioned that 64, 65 is the immediate supply zone. Once stock crosses those levels, then our target is 72 for near-term basis. But if we analyze the overall structure for PNB, it's looking very promising on the monthly chart also, and the monthly chart is clearly indicating that there is a clear breakout on the long-term chart, and we expect this rally can extend in a couple of months, and possibly 80 to 85 is the possible target on the positional basis for PNB. So one can buy this stock and accumulate if you get any chance to buy and accumulate in the decline. Your stop loss should be around 56 and upside target is 80 on the positional basis.
Okay. Rajesh, wanted to take your view on Indigo now. The share price had dipped about 4% yesterday after the Gangwal family had sold stake via block deal, but it has recovered today about 1/4% up right now. The stock is trading at about 24.60. Your thoughts here?
So overall long-term setup for Indigo is on the bullish side. Yes, some supply pressure is there, but looking at the overall structure, we do expect that if stock not slip below 2400 level, then again there would be buying interest will come in the stock prices, and then stock can start showing some recovery from those level. So 2400 should be your stop loss if you are buying at current level. If stock not breaks below those level, then we expect that some recovery trade will be there in coming trading session. 2500, 2540 are the immediate supply zone. So once the stock crosses about 2540, then stock will show furthermore upside, as overall structure for the stock is on the long side only. So stock is giving you the opportunity again to buy and accumulate in the decline. So 24 with you can buy with stop loss of 2400.
All right, you can buy with a stop loss of 2400 at this point in time. Indigo definitely the biggest market share of 55% in the Indian aviation space. We'll continue to watch this space as well. Rajesh, please do stay on with us. Let's now shift focus to our corporate radar section, where we have with us Mr. Rajesh Bhatia, who's the CFO of Uflex. The company has posted a consolidated loss after tax of 416 odd crore rupees in this quarter. However, this was largely due to an exceptional item. Mr. Bhatia, welcome to Business Today TV. Sakshi this side, and with me is also my colleague Shail Bhatnagar. My first question to you is about this exceptional item you took in this quarter gone by, which led to a loss in June quarter. Do you see this as a one-off, or could this also continue in the coming quarters?
I think we'll have to wait and watch as to how the things emerge, because Nigeria recently depegged its currency from a central bank related exchange, given exchange rate to a market parity. So there may be some more surprises in the next quarters or a few. All also depends on as to how the dollar behaves. Internationally, we've seen that in many jurisdictions we are present. We've seen the dollar shortage, like, last year, Egypt was the key in terms of the losses we took on account of the devaluation of Egyptian pound versus the dollars. So I think both things are playing a part. One is removal of a fixed peg by Central Bank of Nigeria, and the dollar availability in many of these, upcoming economies. I'll keep my fingers crossed over the next few quarters as I see, the exchange parity stabilizing.
Yeah. Good morning, Mr. Bhatia. A brief about Uflex. It's selling flexible packaging solutions in India, and is the maker of BOPET films. These are biaxially oriented polyethylene tetrathylate films. which you see on window screens, on your car screens, etc. Mr. Bhatia, welcome to Business Today Television. It's been a very bad phase for the entire industry. You are no exception. When do you see the overall flexible packaging industry turning around? We've seen pretty bad numbers coming in from the entire sector, and yours just showed a net loss.
So I think we'll have to split this problem into two. One is India and other is the global. So while India is a clear case of bunching of capacities at one point in time in the current year, beginning with I would say about 6 to 8 months ago. Overseas, it's a problem. Europe and America, particularly, which are very large markets for us, and we have manufacturing facilities as well as we trade in a lot of product over there as well. So there, it's a structural issue what we are facing. So there is a lack of consumption because in Europe the energy prices have gone up, the mortgage costs have gone up, and in US with the quantitative tightening as well as the rising interest rates, it's affecting the consumption in some ways as the consumers align their budgets to pay more for the mortgages and for the energy in Europe and pay for the more of the mortgages in USA and coupled with the high inflation in US. So if we all believe that the increase in the Fed led interest rate is coming to an end, I think we'll see the light in the next 1 or 2 quarters. India, let's talk about India. India, there are few plants which got bunched together, and that's why we are seeing a bit of overcapacity, which is leading to these crash in prices. I think that will get adjusted in next 3 to 6 months time or so because we typically seen that India on an average can accommodate two new capacities coming on stream in a particular year. So I think that is another maximum 3 months kind of a thing that we see. BOPP already we see that the prices have been better in this quarter as compared to last quarter. But the BOPET is what is keenly we are all watching. And being an industry leader along with the other
Right.
industry players, we sure that this position gets corrected in about 3 months time.
Mr. Bhatia, of course, this quarter, the quarter gone by, was hit by a one-time charge on your balance sheet and P&L account. In the subsequent quarters, do you see UFlex turning positive? The reason why I ask this is we've seen very, very deep undervaluation on the entire sector. I mean, 14,000 crores is your top line and market capitalization is just 2,700 crores. The market is completely ignoring the sector. What would be your forecast for the coming 3 quarters as far as UFlex's bottom line is concerned, sir?
I think if we see this quarter, we saw about 9.3% EBITDA margin on a top line of about 3,300 odd crores. So I think as our Dharwad facility got commissioned from 1st of April, and that's why in India we've seen a 22% volume growth in the Q1 over on a YOY basis. We will also see uptick in demand in the global markets. So overall, I think given this exception loss kept aside, I think for the year as a whole, we'll definitely be, into the profits. I hope that the margin profile improves from about 9.3% currently to about 12% for a year as a whole basis. And we see the silver lining at least in H2. So that's what we feel that should be the order of the FY24 for us.
Okay. Could you also talk to us about your debt reduction plans going forward?
Debt reduction is happening on its own. We have when we go do any capex projects and all that. So there are certain amortization schedules which are there as part of that debt that we raise. So that's happening. That's about 500 crores happening each year for us. But because we are also constantly expanding and adding new capacity, which means you are adding more of the top line as well as the bottom line. So if we see ourselves 5 years before and now, I think we more than doubled in our top line as well as the profitability. So while the debt is being added, I think we are looking very cautiously that we do not get saddled with an extra debt what is non-sustainable. So we very conscious of that, and we'll take care of that. Having said that, about 500 to 600 crore is the annual amortization of the debt, which will keep on happening. But having said that, wherever there are opportunities to grow in our field, I think we'll have to look at those growth plans. Aseptic packaging, particularly if you've seen that, we've hit our capacity constraints in the current year for what we can supply. Uh, the market has been also soft this year for the aseptic packaging, given that, we had early monsoon this year, which means that, the demand for any liquid juices or drinks and all that goes down. But we also had a capacity constraint. We couldn't do on that. So by the end of this fiscal, we'll have our capacity expanded to about 12 billion packs a year, which is by debottlenecking our existing facility only at a small capex. So I think once that comes in next year, we will if we see about 12 billion packs a year selling from this business. I think that's that will add more to the revenues, because there the margin profile is much better than the flexible packaging as well as the packaging films. So overall, that business looks very promising. And once we achieve a 12 billion capacity and we are able to sell that capacity, so obviously in the current plant, then there is no further sort of debottlenecking opportunities available. So we'll have to then look at, in a couple of years, probably from now, look at fresh investments in some of these businesses where we are running at a very high capacity utilization levels.
So, Mr. Bhatia, is there any possibility of the demerger of your packaging business also from your film business? Because that has also been something that the state has been watching out for from a long time.
I think that's not on the cards as of now, because both the business complement each other. Like India per se, if you see our packaging films business, and given that we are the largest flexible packaging company in the country also, so there is a lot of internal consumption also happening, in that. What we were planning to do rather about a year back was to look at a US listing, which we had to defer because of the markets, didn't support us. But at an opportune time, we will definitely look at that opportunity again. And the valuation play in the global markets is far, far, far better than what we see. How the India markets, sort of values all the companies in this segment, but especially
Right.
the packaging film segment. So I think that will be a game changer. We thought so that that will be the best, because we have a substantial business overseas. Our overseas business itself is close to about $1 billion today, and that's a very substantial business.
Right. Mr. Bhatia, what is your existing capacity utilization overall, and how much of fresh capacity are you going to add in this financial year?
So this financial year, I don't think so. We are adding any further capacity. By the end of this fiscal, we would have done the aseptic debottlenecking from current capacity of about 7 billion packs to about 12 billion packs. Whatever capacities had to come on the packaging film side, they are already implemented. And as I said that, from 1st of April, we commissioned our Dharwad project in Karnataka. So there are no further large capacities which are coming on stream. There is a backward integration facility which we are setting up in Panipat for making the resin polyester chips at Panipat, which will cater to our domestic as well as the international facilities. So that will
Right, sir.
happen probably by the end of this fiscal as well.
Right. Thank you, Mr. Bhatia, for your time. And we sincerely hope that the coming 3 quarters would see UFlex, India's largest flexible packaging company, report a green tick on its bottom line. Let's get back to the markets. Nifty is now down 75 points at 19,390. Bank Nifty is flat at 43,920. Nifty IT is also in the red, down 200 points at 31,000. Let's look at stocks that we had discussed ever since Rajesh joined us. Cochin Shipyard, 11% higher at 900. Also the fact that it's less than 1 hour of trade, Sakshi, and we've already crossed we've already crossed 5-day average volume. Rajesh, any view that you'd like to put across on Cochin Shipyard? Do we see 4 digits soon?
Yeah, Shailji, definitely, because very strong buying action is taking place, and this is the third day where we are seeing very strong volume in the stock, and buyers' interest is intact in the stock. Looking at the breakout, yes, we do expect 962,000 could be the next target for the stock on a short-term basis. So those who have bought at lower price, they can trail their stop loss higher now. Your stop loss now should be at around 855 and hold the position for 962,000 target. So stock is looking very promising and very strong buying action is taking place in the Cochin shipyard.
Right. Sakshi, with your permission, we'll make it as the hero of the day. This is Cochin Shipyard that we are talking about. And also at the same time, let's look at Garden Reach and Masdog. Over to you, Sakshi.
Absolutely, very, very strong moves. And just like how you had talked about, just before when we were pre-opening as well, we were discussing how Garden Reach Shipyard was definitely the stock of the day yesterday. Still continues to move up strong, 4.5% at 810. Cochin Shipyard as the top gainer of the day and hero of the day for sure. Mazagon, let's look at that one as well. Where is that headed? Masdog has been a consistent performer at 1970, 1.7% higher in trade. Rajesh, between these two, do you still continue to say that one can hazard a buy at these levels too?
Yeah, a very strong buying action is happening in these three stocks, Mazgaon Dock, Cochin Shipyard, Garden Reach. So whole sector is moving up. So we do expect a further more upward momentum can be there. Cochin, we have already discussed. Mazgaon Dock, we are projecting target of 2050 to 2100 in the continuation of this trend. As the stock managed to be breakout on the falling channel on the daily chart. So this stock is looking very promising. Garden Rich is also looking very promising. This is the third consecutive day where strong buying action is taking place. A very strong buying on a daily, weekly, monthly time frame. So we expect 860 to 880 could be the possible target on the positional basis. So GRSE is also buy with stop loss of 765.
Okay, well, on that note, thank you so much, Rajesh, for being with us and discussing all these wonderful stocks with all our viewers. Many thanks, Shell, also for being with us and discussing these fantastic stock ideas with all our viewers as well. Meanwhile, Nifty is down 85. Now it's tested that 19,400, now at the day's low at 19,379 currently. So pressure building up. 275 points down on the Sensex. The Nifty Bank also trading at 43,946, about 0.3% of a decline for this one as well. We'll continue to track the markets for you through the trading session to see if there is any kind of a bounce that we can expect again in the second half of trading session. We'll continue to watch out for all of those cues. So you stay tuned with us onto Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in. Let's focus on the company Shriram Properties. The company has reported its earnings and it has registered a net profit of about 16.6 odd crore rupees in Q1 compared to 10.5 crore rupees in the corresponding quarter of last fiscal year. We've also seen it posting a growth of 59% year on year on this front. The revenues have grown